Hello and good morning to all. Myself, Abhishek Doshi, and I am here to discuss with you all the topic of annual return and audit under the GST with special weightage to the important issues for financial year 2018 and 19. Friends, we all know that we are in this lockdown period and we cannot go outside, right? But we can definitely get updated ourselves, and therefore we at KSD and Associates have taken this initiative of knowledge sharing. And this knowledge, as a part of this knowledge sharing activity, we are here with this topic. So let me start with our today's topic, right? So as we discussed, this is our today's topic: annual return and audit under the GST with important issues for financial year 18-19. As we all know that we are working from home at this time, and I thought that this topic or this assignment of annual return and audit of GST maybe easily we can do from the home, because we have finalized the books of accounts and audit has been done for the financial year 18-19, and all the data are readily available with us. So we can have the work of annual return and audit under the GST work as a work from home also. And I thought this session would be really helpful in executing this work. So let's start with the today's topic and what we will discuss. First of all, let's see contents. First of all, we will have the quick revision of the GSTR 9 and GSTR 9C. As we all know that we have just completed the GSTR 9 and 9C of 2017-18 in just last January, I think before 3 or 4 months, right? So we all are aware of the various tables of the GSTR 9 and GSTR 9C, and we are very well aware of what are the amount to be reported where. So I will not go into the detail of the nitty-gritties of the GSTR 9 and 9C, but we will have the quick revision of the GSTR 9 and GSTR 9C. In that quick revision, we will cover, first we will do the approaching of the GSTR 9 and GSTR 9C. Then we will have the structure. What is the structure of the form GSTR 9 and 9C? Then we will have the relaxation, or one can say optional reporting. The government has given various relaxation in phase-wise manner for the GSTR 9 and GSTR 9C reporting. And major relaxation have been come in the end of the last 2019. So what are these relaxations and what reportings are made optional? We will discuss that, because this is also really helpful, and at present also many of us don't know what fields are the optional or what fields are the mandatory. And then at last we will have the summarized approach for the GSTR 9 and GSTR 9C. Right, so this is about the quick revision of GSTR 9 and 9C. We will do around in 20 minutes, and then we will go to the specific issues for financial year 18-19. In specific issues, we will cover output tax liabilities, input tax credit. There are issues with reference to TDS and TCS, and then there are issues with reference to e-waiving. Right? So let's start with our first part of the session, quick revision of the GSTR 9 and GSTR 9C. In that part, we will do the, first of all, we will go through the approaching of GSTR 9 and GSTR 9C. Approaching means what are the preparedness required from our side. How we would approach the preparation of the GSTR 9 and GSTR 9C. So basically, what details we should keep ready before filing of the GSTR 9 and GSTR 9C. So we have done the GSTR 9 and 9C for the FY 17-19. So most of us all know about this, but still I will discuss some important issues. First and foremost important issue is understanding business of the registered person, including the nature of the other income. So it is very important. First, we have to identify what is the business of the registered person, whether trading concern, whether manufacturing concern, what are the commodities they trade, What are the commodities they manufacture? What is the raw material? What is the finished product? What is rate applicable to each and every product, right? Whether the registered person is engaged in export or SEZ supply, whether any of the supplies are exempt supply or not, whether they are executing any 0.1% supply or not. So we have to identify all these transactions and identify what is the exact nature of the business of the registered person. Then we will have to have idea of the laws prevailing at the relevant time of 1890, because the GST law has kept changing every time. The law has been changed, and constant there are amendments in the GST law. So what is important for this annual return is the law prevailing at the time of 1819. So we should have the idea of this. Then understanding of accounting system and software used by the registered person. This is very important because every registered person may have some different accounting system. More or less basics of the system will be same, but they may have some different systems. Say for example, many people have the different ledgers for the different GST ledgers, right? CGST, SGST, IGST. Some registered person may also maintain rate wise the CGST, SGST, IGST ledgers. Some people may maintain only one GST ledger for inward and outward, right? And some people may have the system of passing accounting entries to journal, or some people have the specific GST voucher system. So what is the accounting system followed by the registered? That is very important. Then what are the software used by the registered person and how that software helps in reporting or making compliance for the GST, right? Because normally nowadays all software comes with the GST enabled thing, and every software generates the GST reports. But when registered person is using any specific accounting software, it is very much important to know what is the system of the software, right? Say for example, for the GST enabled things, you have to pass entry to the GST voucher. But I have passed the entry for sales to general voucher. So it may happen that that entry does not get reflected in my GSTR1 or GSTR3B. And at the end of the year, there may be difference between the GSTR data and books of accounts. So it is very much useful which software is used and how that software operates. Then this is the basic thing, collection of the basic documents, all returns like GSTR1, GSTR3B that will be readily available with us. Audited, unaudited financial statements duly signed by the registered person. And then at last, summarize GSTR1, GSTR3B and draft GSTR9, which are readily available on portal. GST portal gives you the summarized GSTR1 and 3B for the entire year. That we should download, that will be useful in the reconciliation. Then we have to do the various reconciliation of various data. Which kind of these data are? First of all, outward supply and tax as per GSTR3B and as per GSTR1. So we all know that at present we are filing two returns, GSTR3B and GSTR1, but those two returns are not interlinked. So it may happen that there is a variation in both these returns, right? So GSTR1 is only for outward supply, while GSTR3B is for outward supply as well as ITC. So first of all, we need to match outward supply and tax as per the GSTR3B and GSTR1. After reconciling the same, we need to reconcile the outward supply and tax of the GSTR, that is GST returns either 3B or 1 or actual data with books of accounts. Right? Similarly, we have to make reconciliation for input tax credit as per 3B and books of accounts, and input tax credit as per 3B and with GSTR 2A. Right? We have done compilation and reconciliation of all this data. But what if there is a difference? There may be various reasons for the difference. We have to find out the reasons. The reasons may be various, but the result of the reason would be that either the tax has been paid excess or either the tax has been paid short. So if there is short payment of tax, we need to pay the same through DRC 03 channel, right? We will go into details at the last. What kind of what there are, how can be differences, what kind of differences may be there, and how we can resolve such differences. We will say we will see at the end of this presentation. Then in approaching GSTR 9, we need to check the GST applicability on the other income. It is also very important. Say for example, rent income. So I am discharging my GST liability on my entire turnover. But I have also commercial rent income, which attracts GST. And if I have not discharged the GST liability on the same, I need to discharge the GST liability on rent income. Even in case of proprietary concerns, when the personal books of accounts are maintained separately, right? So in my books of account of my proprietary concern, I have discharged the GST liability on all the incomes. But in my personal books of account, I have commercial rent income and I have not discharged the GST liability. Then I am supposed to discharge the GST liability on such rent income, and I should, if I have not discharged, I should discharge along with the interest. So likewise, rent income, there are many other incomes which may be there in the financial statements, and we need to check the GST applicability on the same. Another important point is that to check for the ITC reversal. ITC reversal are required on various grounds, right? Say for example, ITC used for the exempt or non-business supply, 180 days payment failure. Then there are various restrictions under section 17(5). For example, foods and beverages, car, construction, works contract, etc. So if any ITC reversal required on account of any of these reasons, and if the same has not been made, we have to be give effect in the annual filing of the same. One of the important thing of the ITC reversal is ITC reversal required for the exempt supply. It may so happen that I don't have any exempt turnover. My main item or my main manufactured or traded item is taxable and I am discharging GST liability on entire turnover. But I may have some other incomes which is in the nature of the supply, but it is exempt supply. Say for example, sale of export license, right? At present, the export license sale is exempt under the GST. So I may have the sale of the export license, right? So it is exempt supply. So even though my total turnover is taxable, but I have the some other income which is exempted from the GST, and I am required to make proportionate reversal of ITC for such exempt supplies of only what we can say is the common credits, right? So we need to check these things on annual basis if it is missed down on monthly basis. So after this approaching, these are just the screenshot where we can go get the annual summarized GSTR1 and summarized GSTR3B from the portal. This is the annual return format, and from there we can get GSTR1 and 3B annualized format. And this is the comparison tab. By entering under this tab, we can have the various comparisons of output liability, ITC with 2A on monthly basis, and this comparison will be really be helpful in our reconciliations of various data. Right? Then let's see what is the threshold for the FY 18-19. As we all know that there are many relaxations for the FY 18-19, and therefore it is important to understand what is the threshold for the FY 18-19. Every registered person except 5 categories of persons are required to file. Which are these 5 categories of persons? ISD, person paying tax under section 51 or 52, that is TDS or TCS, casual taxable person, and a non-resident taxable person. Except these 5 categories of persons, all persons are required to file GSTR 9 annual return. Due date for FY 18-19, we all know that recently they have extended the due date up to 30th September 2020. So at present, the due date for FY 18-19 GSTR 9 and 9C is 30th September. And threshold limit for 9 and 9C. Who are supposed to file the GSTR 9, for whom it is optional, who are supposed to file GSTR 9C, and for whom it is not required. So we have given this table for the category of person. First category of person is person who is having aggregate turnover below rupees 2 crore. For them, GSTR 9 is optional. They can file or they cannot. They may choose not to file their GSTR 9, and GSTR 9C is not required in their case. But it is our strong recommendation that every registered person should file the GSTR 9, because there it may so happen that GSTR 3B and 1 may have certain differences or certain unreconciled items. So if you file GSTR 9, it will helpful in making at the time of assessment. So below 2 crore person, it is optional, but it is advisable to file GSTR 9. Then registered person having turnover between 2 crore to 5 crore. For them, it is mandatory to file the GSTR 9 annual return, but GSTR 9C is not required. In 1718, the limit for the GSTR 9C was 2 crore, but now the same has been extended up to rupees 5 crore. So any person below the turnover rupees 5 crore is not required to file the GSTR 9C. Then aggregate turnover exceeding rupees 5 crore. So all the registered person whose turnover exceeds rupees 5 crore are supposed to file GSTR 9 as well as GSTR 9C. So both forms are mandatory for such persons. So this is about the basic threshold for FY 18-19. Then we come to the structure of the GSTR 9. What is the structure of the GSTR 9? GSTR 9 has been divided into 6 parts. Part 1 is just basic details, table 1 to 3, not more important. Part 2 is about the liability, outward supply details and outward tax details in table 4 and 5, one of the important part. Then part 3 is regarding input tax credit, table 6, 7 and 8. It is also one of the important part. Then part 4, table 9 is regarding the taxes paid details. Then part 5, it is regarding details of 18-19 but reflected in the GST returns of the 19-20. Right? The table 10 to 14 covers such reporting. And at last, part 6, other information, table 15 to 19. But part 6 has been made optional. Most of the tables are made optional, so it is not much important. Now we will discuss 2 or 3 important parts of the GSTR 9. First of all, part 2, table 4 and table 5. So as we all know that part 2 is for outward supplies and tax on the outward supplies, right? And it has been divided in table 4 and 5. If you see the difference of the table 4 and 5, the table 4 is for such outward supply on which tax is payable, and table 5 is for such outward supply on which tax is not payable. Say for example, exempt supply, export without tax, etc. If you see the heading of the part 2 is supplies made during the financial year. So what it reflects is you need to report entire supplies made during the financial year in the table 4 and table 5. Then table 4 is for outward supply that we have discussed. Then table 4 and 5 should reflect the actual figures based on the books of accounts. This was the hot discussion since the GSTR 9 has been introduced. What base should we take for the filing of the GSTR 9 and specifically filing of the table 4 and 5 of the GSTR 9? Whether we should go as per the GSTR 1, as per the GSTR 3B, or as per the books of account. So what press release suggests and what we should do is we should go for the actual supplies made during the year. Therefore, we should follow the books of account concept. However, the reconciliation of the books of account with the GSTR 3B and GSTR 1 is very important, right? Because we cannot directly put the figure of the as per books of account in table 4 and 5. Because table 9 is regarding tax payable and tax paid, and that tax paid figure comes from the GSTR 3B, right? So it is very much important that we take the figure as per the books of account, but the reconciliation with the GSTR 3B and GSTR 1 is important, and the tax liability will be adjusted according to such reconciliation. Then another important point for table 4 and 5 is that there are various reporting of credit debit notes for I to 4J and 5H to 5I, right? In this credit debit note reporting, only credit debit note with the GST impact should be reported and no accounting credit debit note. Say for example, I have simply given a one credit note for some discount later on, in which I have not given any GST impact. So it will be called as a accounting credit or debit note, and same should not be reported in the GSTR 9. Then reporting of the non-GST supply, including no supply in table 5F. So what will we report in this table, right? As we all know that there is a no clause or no table for the no supply reporting in your GSTR 1 or 3B. But they have additionally mentioned the word no supply in GSTR 9, right? So our suggestion is that we should not report the no supply data in GSTR 9, right? Because if you report in the table 5F, it will be considered under the head of exempt supply or non-GST supply. And as per the rules, I am supposed to reverse my proportionate ITC for the exempt or non-GST supply. So even if I report some of the no supply, which is not supply at all, if I report that figure under this column, it may attract the department's attention for the reversal, proportionate reversal of the ITC. So it is better to not to report no supply in the GSTR 9 annual return. Let's move forward. Now, what are the relaxations or optional reporting in case of table 4 and 5? Right? Table 4B to 4E, there is various type of outward supplies. In them, in those fields, they have given relaxation that you can report the net of the credit debit notes and amendments, right? So actual format was that you need to first report gross figures, and then in the bottom part of the table that you need to report debit credit notes and amendments. But they have relaxed that you can directly fill the net figures. But our advice would be that these figures are easily available, and we should report the gross figures and credit debit note figures separately. Similar relaxation for the table 5A to 5F. This is for outward supplies on which tax is not payable. In that also they have given similar relaxation that you can report the net of credit debit notes. Again, we should report gross figure to the extent possible. Then 5D to 5F. 5D to 5F is exempt, nil-rated and non-GST supply. There are three separate tables. So they have said that you can combine all these three figures and report under the exempt supplies. That is under 5D. One may choose to report such thing, but as we discussed in previous slide, we should avoid reporting no supply in this GSTR 9. Now let's talk about the table 6, 7 and 8. Table 6, 7 and 8 is about input tax credit tables. As we all know that table 6 is for the ITC availed, table 7 is for ITC reversal, and table 8 is for the ITC comparison with the two-way. So if we keep this structure in the mind, it will be helpful in compiling the data for the GSTR 9. Table 6A is auto-populated, and details of total ITC auto-populated in table 6A based on your GSTR 3B return, right? Then 6B to 6H is the bifurcation of the total ITC. So what is the total ITC in 6A? We need to bifurcate in 6B to 6H, and ideally the difference at 6J would be 0, right? Then there is importance of the table 8, right? In table 8, broadly we are making comparison of the GSTR 2A and ITC availed in the GSTR 3B. So first of all, if there is a difference, right? In 99% case, there will be difference because 100% tally with the GSTR 2A will not be possible in 99% of the cases, right? So if there is a negative difference, that means we have availed credit higher than the reflected in GSTR 2A. And if there is a positive difference, means there is a higher credit in GSTR 2A. So if there is a positive difference, they further ask in the 8E and 8F report the various on which account there is a positive difference. ITC available but not availed, and similarly various reasons. But one may choose not to report under these I8E and 8F because it does not have any legal consequences or legal impact. So we should stop at what difference comes in 8D. We should give the 8A as per 2A, 8B and C, ITC availed as per 3B, difference in 8D, and we should stop there only, right? The most important question in this table 8 is what is the legal consequences of the mismatch of ITC? If I have ITC in the books of accounts or 3B 1 lakh rupees and in 2A only 80,000 is reflected, what is the legal consequences for balance 20,000? Right? As we all know that GSTR 2 and 3 are not being operational. According to the rules for the ITC matching and reversals are still not operational, and there cannot be any legal compulsion to reverse the ITC which are not reflected in GSTR 2A. So ideally table 8 matching, if there is any negative difference, it cannot have any legal consequences. Yes, but the conditions of the section 16 should be fulfilled and my supplier should have paid the tax. Then there is no issue on my availment of the ITC, right? Further, this is regarding FY 18-19. As we all know that from FY 19-20, they have inserted Rule 36(4) for matching of the ITC with GSTR 2A. So we can say that till FY 18-19, there is no legal consequences for the mismatch of the ITC. Now, relaxation related to these tables 6, 7, and 8. 6B to 6E, they have given option to report all the ITC under the row of inputs only. As we all know, there is bifurcation of input services, and capital goods is required for reporting under 6B to 6E. But they have said you can report entire figure under the input row only. Similarly, 6C and 6D is ITC on reverse charge. They have bifurcated ITC on reverse charge in registered and unregistered person, but later on they have given relaxation that you can report both the amount under the 6D only, and there is no need to bifurcate the same. Then similar relaxation in 7A to 7E. 7A to 7E are various ITC reversals in which they have given options that you can report entire ITC reversal under the 7H other reversal. And if you don't have the bifurcation, you are free to report everything under the 7H, right? So this is the relaxation about the table 6, 7, and 8. Then one of the important table 9. In table 9 we have two figures, tax payable and tax paid. Both are auto reflected on the basis of GSTR 3B, but the figures of tax payable is amendable. However, the figures of tax paid is not amendable. So figures of the tax paid will be as per the 3B only. Right? So if I have made any changes in the table 4 and 5, say for example, I have increased the liability in table 4 and 5, then I need to manually amend the tax payable figure in GSTR 9, table 9, right? It will not be automatically updated, but I need to manually update the tax payable figure under the table 9 of the GSTR 9. Tax paid will be on the lower side, so there will be difference, and that difference should be discharged through DRC 03 challan, right? Then table 10 to 13, we all know that these four tables are mainly pertaining to the transactions of the current year, which are reflected in the GST returns of the next year. Right? Say for example, sales or credit note for sales return or input tax credit availed or ITC reverse of any of these FY 18-19, but some has been reflected in the FY 19-20, first 6 months, April to September. Then these transactions or this tax amount will be reflected in table 10 to 13 and not table 4, 5, 6 or 7 or 8, right? Now they have given relaxation for table 12 and 13. 12 and 13 is for the ITC availed in the next year and ITC reversed in the next year. They have said these tables are optional, but it is our strong recommendation that we should fill these details because it will be helpful, very much helpful at the time of assessment and making reconciliation in the next years. If we don't have the such bifurcation of the ITCs, then it will be difficult to make reconciliation in future. And at last, table 15 to 18 have been made optional, right? Table 15 and 16 are regarding some other details of the refunds, details of the HSN of outward supplies, inward supplies. All these tables made optional. So one may choose not to report anything in table 15 to 18. Right? So this is all about the GSTR 9. This is all about our some GSTR 9 structure and relaxation. And last, we will have the summarized approach for the GSTR 9. Summarized approach for first we will see for the outward supplies, and then we will look into the summarized approach for ITC. So for outward supplies, we all know this, to compile the data of 3B and 1 for 18-19, to make reconciliation, and if there is difference, we need to resolve the same as per the below table, right? So this table is very important. We will take one by one row. So first of all, category of transactions which are reported in GSTR 3B and GSTR 1 of 18-19. Both are years, right? So I have correctly reported transactions in 1 and 3B for 18-19. Then there is no impact in 19-20, and the same will be reflected in part 2, that is table 4 or 5 of the GSTR 9. And second category of transactions, I have missed out the transactions in 18-19 returns, 1 and 3B both. and I have reflected the same transactions in 1920 GSTR 3B and 1. Say for example, one invoice of 1 lakh rupees with the 18,000 tax liability I have missed in 1890, but I have reflected the same in the GSTR of 1920, right? The same will be reflected in the part 5, right? It is either table 10 for sales or table 11 for the sales return or reduction in tax liability. I will reflect in table 5 of the part 5 of the GSTR 9. Then there is a category of transaction in which I have discharged the tax liability in GSTR 3B. So in GSTR 3B my transaction is correct, but I have missed that sale in the GSTR 1. Say for example, one invoice of 1 lakh, I have discharged the liability in 3B, but that 1 lakh invoice has not been reflected in GSTR 1, and I have not corrected the same in 1920 also. So here the tax has been discharged, so it will be part of the part 2 only in table 4 or 5 of the GSTR 9. And I have discharged the tax properly, so I am not supposed to discharge any additional tax liability. Now reverse case. I have reflected the transaction in the GSTR 1, but I have not discharged the tax through GSTR 3B. So say for example, invoice of 1 lakh rupees has been reflected in GSTR 1, but the same has been missed out in GSTR 3B. 1920 I have done nothing, right? So here this transaction will also be classified under table 4 of the GSTR 9 part 2, that is, but the tax has not been discharged, so there will be short payment of tax, and that tax liability need to be discharged through DRC 03 channel. Then the transaction which is completely missed out, I have not reported in the GSTR 3B or 1 of the 1819 as well as the GSTR 3B or 1 of the 1920. In that case also, I will report debt transactions in part 2 of the GSTR 9, that is in table 4 or table 5. And if there is a, there will be short payment of the taxes, and same need to be discharged through the DRC 03. So at last, we can say total tax payable as per books of account should be tallied with tax payable as per table 4 and table 10 less adjustments as per table 11. So table 4 plus table 10 minus table 11. Ideally, it should match with my total tax payable as per the books of account. Then summarize approach for the input tax credit. Again, as we say, we will compile the data of 3B for 1890. We'll make comparison of the 3B data with books of accounts and GSTR 2A, and we will go or give effect as per the below table, right? Say for example, first row, ITC of 1819, I have availed in 3B of 1819. So 1920, obviously there is no impact. The same will be reflected in the GSTR 9 part 3, that is table 6, right? Some ITC I have missed out in 1819, ITC of 1819, but I have not taken in 3B of 1819, and I have availed in the 3B of 1920, right? That will be reflected in part 5 of the GSTR 9, that is table 13. I have not reflected GSTR ITC in GSTR 3B of 1819 as well as 1920. That is a period allowed, April to September 1920. Then what will happen? Then as per the instruction of the GSTR 9, I cannot avail such credit because the time limit for availment of credit has been lapsed. So again, total ITC will be ITC as per table 6 and 13 less reversal as per table 7 and 12. So this amount, table 6 plus table 13 minus table 7 minus table 7 and minus table 12. This will be tally with my ITC, net ITC as per my books of account, right? So this is all about the GSTR 9. Now let's move to the GSTR 9C. First, we will have the look at the structure of the GSTR 9C. What is the structure of the GSTR 9C? Reconciliation statement. It has been divided in part A and part B, and part A has been further divided in 5 points, right? Part A is various details regarding the turnover, tax liability, ITC, etc. While part B is certification by the chartered accountant or post accountant. So part A point 1 is regarding basic details, table 1 to 4. More important, just basic details. Part A point 2 is table 5 to 8. It is mainly reconciliation of the turnover, right? reconciliation of turnover with books of accounts and GST data, right? These are the covered under table 5 to 8. Then table 9 to 11. It is regarding reconciliation of the taxes paid as per the books of account and as per the GSTR 9. So table 9, 10 and 11 is for the reconciliation of taxes paid. Then table 12 to 16, right? It is various details regarding input tax credit and reconciliation of the input tax credit. Then part A, point 5, that is auditor's recommendation due to non-reconciliation. So here the important word is due to non-reconciliation. So if there is any additional recommendation, liability recommendation due to non-reconciliation, I may report under the part A, point 5, and this will be under the point 5 or para 5 of the form, right? And then part B regarding service certification. Certification has also been divided in two parts. When the person who is signing the books of accounts and signing 9C are the same, and when the person who is signing books of accounts and signing 9C are different. There are two categories of certification. So this is, we have learned about the basic structure of the GSTR 9C. Then there is a scope of the GST audit, right? There were lots of debate what is the scope of the GST audit and how far the CA should or post accountant should go, right? The CBIC white press release dated 3/7/19 has clarified the role of the chartered accountant. The important line is last two lines, underlined lines. The role is limited to reconciling the values declared in the annual return from GSTR 9 with the audited annual accounts of the taxpayer. So what this press release is stating that the role of the chartered accountant is limited to reconciling the values of GSTR 9 with the books of accounts. So main responsibility of the CA is reconciling the values under the GSTR 9C. So we should keep in this in mind when we are exercising the GSTR 9C. However, there is a specific certification in the 9C regarding accounts and records maintained, right? The CGST rules prescribes so many details about the accounts and records to be maintained by the registered person, and we as a chartered accountant need to certify the same, what kind of the accounts and records are maintained and whether all the records and accounts required as per the CGST rules are maintained or not. So we need to look into the same and we need to list out what are the requirements of the accounts and records and whether same has been maintained or not, right? Then what are the attachments to the form 9C? Everyone is required to attach audited balance sheet and audit profit and loss account along with the 9C. Audited cash flow statement is also required to be attached. However, it has been made optional in the cases where the cash flow statement are not applicable. So cash flow statement has been optional. And any other attachments. It is always advisable that we chartered accountant attach statement of observation, disclaimers and notes, right? Some separate attachments should be made where we disclose our various observations or various disclaimers or various workings for the form GSTR 9C. It will be helpful in the later stage. So we have seen the structure of the GSTR 9C, and now we will take some of the important tables of the GSTR 9C. So broadly speaking, the GSTR 9C has been divided in three parts. One, turnover reconciliation. Second, reconciliation of the tax liability. And third, reconciliation of the input tax credit, right? So table 5 and table 7 is regarding turnover reconciliation. Table 5 is first of table and at most important of the turnover reconciliation of the books of account and turnover as per GSTR 9, right? Now in table 5, one of the important thing is what should be reported the 5A. 5A is for turnover as per the audited financial statement, right? In normal any kind of financial statement, we will have the revenue from operations on which GST has been discharged, and then we will have the other incomes. Under the other incomes, some of the incomes may be such that on which GST is applicable and discharged. Some of the income may be such that on which GST is not applicable. right? So in 5A, whether we should report revenue from operations or we should report all the revenue attracting the GST, right? So if we go to the definition of the turnover, it includes all supply. So ideally we should report revenue from operations as well as the other incomes on which GST has been charged or attracted, right? We should report entire thing under the 5A, and then we should give separate working in the notes about what figures has been mentioned in the table 5A and how that figure has been derived. Alternatively, one can do that. They reflect the figure of revenue from operations, and then if there is any other income on which GST has been discharged, that other income has been adjusted in table 5O, other adjustments, and the separate working of the same may be given in the notes specifying that these are the other incomes on which GST has been discharged but not considered under the revenue from operations, so has been added separately in the table 5O. Both are the options. One can go as per their wish. Then table 5O, it is very important to give the bifurcation of the amount mentioned at the table 5O, right? Table 5O is adjustment on account of other reasons. So if I have given figures of, say, for example, 20 lakhs in the table 5O, it is very much important that I give the bifurcation of those that 20 lakhs in my notes or disclosures, how that figure of 20 lakhs has been worked out, right? Similarly, table 7 is taxable turnover reconciliation. So table 5 is total turnover reconciliation. Then table 7 is taxable turnover reconciliation. Then table 9 is tax liability reconciliation, right? In tax liability reconciliation, we need to give rate-wise bifurcations of the output tax liability. And we also need to give rate-wise tax liability of the RCM liability, right? So total liability will be tallied with the GSTR 9. So normally we will get easily the rate-wise bifurcation of output tax liability from the software or from the data of the registered person. But it may be difficult to get the rate-wise bifurcation of the RCM liability if same has not been made in each and every month, right? So in that case, we need to work out the rate-wise bifurcation of the RCM liability, and same will be reflected in table 9. Then table 12, input tax credit reconciliation. In this table, we need to mention the ITC as per books of accounts, then ITC booked in earlier year but availed in current year, or ITC booked in current year but availed in the next year. These two adjustments will be made in 12D and 12C. And then 12D will be the total ITC as per books of account. The total ITC will be matched with the total ITC of the GSTR 9, right? So now we have done all this reconciliation in our GSTR 9C, and now there may be additional tax liability due to non-reconciliation of any of this amount. Say for example, output tax liability in books of account is on a higher side than the discharge in the GSTR 9, then there will be additional tax liability. ITC availed in GSTR 3B is on a higher side than compared to the books of account, then there may be additional tax liability, right? And turnover or tax liability in books of account is higher than the reflected in GSTR 3B and 1, then there may be additional tax liability. So all this reconciliation, if there is any unreconciled amount, we need to give reasons for the same, and it may attract the additional tax liability. Now there are also various relaxations given in the reporting of the GSTR 9C. First of the relaxation for the table 5. There are various details or various grounds given in the table 5B to 5N, which may be the reasons for the reconciliation between books of account and GST data. So I need to report various amount on the field wise on 5B to 5N. But they have said that you can mention entire difference in 5O itself, right? But our advice would be, it is strongly advisable that we should report each and every amount against the each specific item, and if we are reflecting any item under the 5O, then detailed bifurcation of the 5O should also be given. Say next relaxation is in table 12, table 12B and table 12C. it is regarding ITC booked in earlier year, taken in current year, or ITC booked in current year and taken in the next year. So they say that these details are optional. However, again, it is advisable that we fill the details in 12B and 12C, because 12 it will be also matched with the table 12 and 13 of the GSTR 9, and it will be very much useful at the later stage at the time of assessment and any other proceedings, right? And then at last, table 14. Table 14 was regarding the expense wise bifurcation of ITC, in which we need to give bifurcation of the total ITC on the basis of the expenses. For the purchases, this much ITC has been availed. For so and so expenses, this much ITC has been availed. This table, entire table, has been made optional, and one may choose not to report anything under table 14. Right? Now we will discuss issues for specifically for FY 18-19. Right? So we have discussed till now is about the basics of the GSTR 9 and GSTR 9C. And now we are moving to the issues for the specific for the FY 18-19. That is year specific issues of 18 and 19, right? We have seen the structure of the form, right? GSTR 9. So if you observe the form, then there are tables 10 to table 30. These four tables are specifically for the transactions of the current year, but reflected or reported in the GSTR of the next year. So what we have done in the 17-18 is, say for example, my total turnover is 1 lakh rupees, and out of this 1 lakh rupees, 90,000 has been reflected in 3B and 1 of the 17-18. The 10,000 in its tax amount has been reflected in the GSTR of 3B and 1 of the 18-19. So what we have done is, in 17-18 annual return, that we will reflect the 90,000 turnover in part 2, that is table 4, and then 10,000 turnover will reflect in the table 10. So 4 plus 10 will become total 1 lakh rupees turnover, right? So now when we come to the second year or the next year of 18-19, again we have table 10 to 13 for the adjustments of the 18-19 made in 1920. But what about the adjustments of the previous year done in the current year? Right? I have paid the taxes for the transactions of the 17-18 in the 18-19 and have reflected in the GSTR 3B of 18-19. So how will I reflect those amounts? So this is the main issue in the FY 18-19 annual return, right? So there are various scenarios in which case the same issue will arise. The same will also applicable for the input tax credit, right? So what we have done is that we have bifurcated the issues in the output tax liabilities, input tax credit, and some other issues. So we'll turn by turn take one by one the issues, and in those issues we will take various scenarios. What are the scenarios and what are the possible or probable resolutions for the same? First of all, output tax liabilities. In that case, we will see first scenario 1. Scenario 1 is such that tax sought paid in the 17-18, only tax amount has been sought paid. The same has been paid 18-19 and reflected in GSTR of 18-19. So there is no mismatch of turnover. Say for example, turnover has been properly reflected in 3B, but the tax amount has been reflected less, and accordingly tax has been paid sought, right? The same short payment of tax has been reflected in the GST 3B of the next year. Say for example, April 18, right? And I have paid the tax in the GSTR 3B of April 18, right? Then what will be the consequences of the GST annual return? So here we are not talking about the cases where there was a short payment and I have discharged the liability through DRC 03 challan. If I have discharged the liability through DRC 03 challan, the same will not come over here, right? So here is the case. I have given that in 17-18 tax payable was rupees 1000, paid and reflected in 3B of 17-18 900 rupees, and 100 rupees I have paid and reflected in 18 19 GSTR 3. So what will I do? First of all, what will we have done in the GSTR 9 of 1718, right? In 1718, we would have reflected in table 4 tax liability of rupees 900, right? Though actual liability was 1000, but we have discharged the 100 rupees in next year. So in table 4, we will reflect 900. Then table 10, we will reflect 100, which is paid in the next year. And then there was table 14. Table 14 was mainly for the tax payment details on account of table 10 and 11. So again, we have paid tax in the next year. So in table 14 also, there will be 100 rupees reporting. So mostly all people must have done the reporting in such manner. Some may have preferred some other reporting, but this is the ideal way of reporting, and we will discuss in this session only. So this is the effect in 1718 GSTR 9. Then how we will reflect the same in the GSTR 9 of 1819. Now for 1819, there is a, say for example, tax liabilities of rupees 1500. So in table 4, we will reflect 1500 only. Even though in GSTR 3B I have paid 1600, but in table 4 I will reflect only 1500. Table 9, tax payable column, it will be 1500 only because my liability in table 4 is 1500. But table 9, tax paid column, it will be auto-populated from the GSTR 3B and non-amendable. So that amount will reflect 1600 because 1500 of 1819 and 100 rupees of 1718. So tax paid will reflect the 1600. So here in GSTR 9 of 2018-19, there will be difference in tax payable and tax paid in table 9 of the GSTR 19. However, the effect is that tax paid is on higher side, so there may not be much issue, but the difference is 100 rupees and the same will be tallied with the reporting of table 10 in previous year, right? So 100 rupees we have reported in table 10 of previous year GSTR 9 and same will be difference over here, right? So in audited cases, we should reflect in the notes to GSTR 9C, we should disclose this working and why there is difference between tax payable and tax paid. We should mention in our notes, or we should make some disclosure in this regards. Now we took another scenario, second scenario. Tax excess paid in 1718, only tax, and the same has been adjusted in 1819 and reflected in 3B of 1819, right? So we are not talking here about the excess paid tax in 1718 and later on claimed as a refund. If the refund has been claimed, the same will not come over here. But in here, I have tax payable in 1718 only 1000 rupees, but by mistake I have paid 1100 rupees in 3B of 1718. So I will adjust the 100 rupees in 1890 liability, right? So how these transactions would have been reflected in 9 of 1718? In table 4, the amount of 1100 would come because I have adjusted 100 rupees in next year. So in table 4, rather than 1000, figure of 1100 would come. Then table 11, deduction in tax liability, 100 rupees will be there. So net liability will be 1000 rupees, which will be tallied with the books of accounts, right? And in table 14, it was just disclosure, it will be minus 100 rupees. Or some may have skipped the reporting table 14 also. Then effect in GSTR 9 of 1819. What we will do in the 1819? And assuming that liability is 1500 rupees in 1819. So in table 4, the figure will 1500 will come. Again in table 9, tax payable will be same 1500. But the tax paid figure, which will be auto-populated from the GSTR 3B, will be rupees 1400. Because in 1819 I have effectively paid 1400 rupees only, and 100 rupees excess payment of the 18 has been adjusted here. So here there will be difference between tax payable and tax paid, and the difference will be short paid. That is, tax payable is higher side and tax paid is on lower side, right? So this reporting may attract the attention of the portal or authorities directly. So it is always, but there is no solution to this. So we have to live with this, but we should make proper disclosure about this difference, why there is difference of sort paid taxes, why there is tax payable is on higher side and why there is tax paid is on lower side, and the difference amount is exactly telling with the table 11 figure of the previous year annual return, right? Then let's take scenario 3. In scenario 1 and 2, we have talked about only tax impact, right? So in scenario 3, we will talk about the entire supply transaction has been missed out, right? There is one invoice of, say for example, 2000 rupees in 1718, which has been missed out in 1718 and reflected in 3B and 1 of the 1819. So these are the facts. In 1718, my total turnover was rupees 20,000 and tax liability 1000. In 1718, I have reflected 18,000 turnover and 900 tax liability, and remaining 2,000 turnover and 100 rupees liability I have discharged and reflected in GST 3B and 1 of the 1890. So in this case, what we will do, in the annual return of the 1718 already filed, we would have disclosed the taxable value of 18,000 and tax of 900 in table 4, because we have discharged the liability on the same. Then taxable value of rupees 2000 and tax of rupees 100 in table 10, right? So table 4 plus 10 will match with my books of accounts. And again in table 14, as I have paid 100 rupees in next year, I will reflect 100 rupees of tax payment in table 14. So this is all about the reporting in last year annual return. Now what we will do in the current year, FY 18-19 annual return. Assuming that there is a, in 18-19, there is a taxable value of 30,000 and tax liability of 1500. So table 4 will report taxable value of 30,000 and tax of rupees 1500 only, right? Even though I have reported 1 and 3B turnover rupees 2000 additional, so they, by becoming it becomes 32,000 turnover, 30,000 plus 2000. But in table 4, it will be reflected only 30,000 turnover and 1500 tax liability. Further, in GSTR 1, though I have reported the transactions of the 1718 and 1819, the auto-populated GSTR 9 fetches only transactions of 1819. So there is one invoice of March 18 which has been reported in April 18. That same will not be fetched under the table 4 of the GSTR 9. So in table 4 of the GSTR 9, the turnover and liability of 1819 only will be reflected, that is 30,000 and 1500. Now table 9 tax payable is again 1500, but table 9 tax paid will be 1600 because we have paid 100 rupees of earlier in this current year. So again there will be difference between tax payable and tax paid, and which we should disclose in the notes or make some proper disclosure somewhere else, right? And same scenario for the sales return, that is credit note missed out in 17. So I have recorded all my sales invoices in GSTR 3B and 1 of 1718. But there is one credit note for the sales return which I have missed out in GST return of the 1718. Such credit note has been reflected in the GST return of 1819. So these are the facts. Taxable value 20,000 and tax 1,000. Sales return was 2,000 and tax on the same was 100 rupees. But same has not been reflected in 1718 and it has been reflected in 1819. So first of all, what would I have done in the annual return of 1718? In table 4, I will reflect taxable value of 20,000 and tax of rupees 1,000. While in table 11, I would reduce the liability by reflecting taxable value of rupees 2,000 and tax of rupees 100, because it is reduction in tax liability reflected in the next year, right? So table 4 and 11 net of will be tallied with my books of account. Now what will I do in the GSTR 9 of FY 18-19, right? In GSTR 9 of the FY 18-19, in table 4, my amount will be 30,000 turnover and 1500 tax. There is no change. Table 9 tax payable will be 1500 only, but table 9 tax paid 1400. So again, there is a short payment of 100 rupees is per table 9 of the GSTR 9, but there is actual no short payment. So again, we have to make proper disclosure that there is 100 difference of 100 rupees is on account of the earlier year tax adjustment, and it tallies with the table 11 of the previous year annual return, right? So these are the 4 scenarios regarding the output tax liabilities which may arise in the 18-19 and we are supposed to make proper disclosure. So it may be helpful at the time of assessment or any other proceedings. Otherwise, this table 9 will reflect the difference, and it will be difficult to give answers at the time of proceedings. So now, likewise, outward tax liability, we see the various scenarios under the input tax credit. What will happen in the cases of the input tax credit? In the input tax credit, scenario 1, ITC of 1718 availed in the 1819. Simple case, there was the ITC of 1000 rupees in 1718, availed in 1718 is 900 rupees, while balance 100 rupees has been availed in 1819. First, we'll see what was the reporting in the 9 of 1718. We must have filed the 9 of the 1718. In that case, how we have reflected the same. Table 6A, we would have auto-populated figure would have been 900. In table 6B, bifurcation would be 900, assuming all the credit falls under the 6B and not 6C to 6H, right? So 6B will be 900, and table 13, I would have reflected 100 rupees, that is credit taken in the next year. So 6 plus 13 becomes 1000, and it tallies with my books of account, right? Now what we will do in the current year, FY 18-19 return. So here I have discussed two options regarding, but in our opinion, option 1 is always advisable, and option 1 is more proper. Why? That we will discuss later on. Option 1, how we will reflect in the 18-19 annual return. First, assuming that 18-19 ITC is 1500 rupees, right? But the table 6A, auto-populated figure will be reflected as a 1600. 1500 ITC of 18-19 plus 100 rupees ITC of 17-18 taken in the 3B of 18-19. So 6A will come as a 1600. Now what I will do is I will reflect, bifurcate only 1500 under the table 6B, right? So if I reflect 6B as a 1500 only, then there will be difference in 6J. The 6J is for the difference between 6A and 6B to 6H. So table 6J, there will be difference of rupees 100 rupees, right? I will reflect the 100 rupees of previous year credit under the table 6M. Table 6M is regarding any other ITC. So here I will prefer to report 100 rupees ITC of 1718 under the table 6M, right? And so my total credit as per 6O becomes 1600, right? Here the advantage would be, now in table 8 comparison, ITC as per Gstr 2A, assuming that all ITC has been reflected in Gstr 2A. So ITC as per 2A will be 1500. In 8B, the figure will go from the 6B. So in 6B, I have reported 1500 only. So in 8B also it will be come as a 1500. So here 1500 will be matched with 1500, and there will be no difference in 8B, right? So this is about the GSTR 9 and how we will reflect in GSTR 9C. 9C, there will not be much issue, because in 9C I will say that table 12A ITCS per books is 1500. In 9C I have column for both the adjustments, booked in previous year and claimed in current year, or booked in current year and claimed in next year. So I have both the adjustments, so I will reflect 100 rupees under the column 12B, ITC booked in previous year and claimed in current year. So total ITC will become 1600, and that 1600 will be matched with the 1600 of GSTR 9. So there will be no issue in the GSTR 9C, right? But here, if we take second option, right? Many people prefer second option, that 1600 ITC will be reflected under 6B only, right? 6A reflects auto-populated figure of 1600, 1500 of 1819 plus 100 of 1718. So if I will reflect entire 1600 under the 6B, then there will be no difference in 6J, right? But in table 8, it will go as a 1600. So now in table 8, what happens? ITC as per 2A is 1500, but ITC as per the 6B is 1600. So there will be difference of negative difference of rupees 100, right? So if we report everything under the 6B, then there are chances that in the table 8 there will be negative difference in comparison with 2A, right? So always it is advisable that in ITC cases we reflect ITC of the 1718 taken in the 1819 under the table 6M. any other ITC. That will the best, or one can say most preferable solution, right? And as we discussed 9C, there will be no much impact. We have already discussed. Now, with reference to ITC, we take the second scenario in which I have made ITC reversal in the next year, right? I have availed ITC in 1718. In books of account, I have made reversal in 1718, but in GST return, I have made reversal in the next year. Say, for example, I have availed 1000 rupees ITC in 1718, availed in 1718 1000 rupees, reversed in 1819 100 rupees. So my net ITC for 1718 was rupees 900 only, but I have reversed 100 rupees in 1819. So first of all, what I would have done in the 9 of the 1718, table 6A will be auto populated 1000 rupees. So I have given bifurcation also in 6B of 1000 rupees. Then table 12, that is for ITC reversal in next year, I would refer 100 rupees. So when I net off the table 6 with table 12, my net ITC available will be rupees 900, which will be matched with the books of accounts. So in 1718, I would have made this disclosure. Now let's come to the what will we do in the 1819 GSTR 9, right? So assuming same 1819 ITC is 1500 rupees, right? So table 6A will give me auto population of 1500 because ITC is 1500 also only in this year. 6B will be 1500, so there is no difference in 6J. Now in table 7, specifically table 7I, there will be total reversal of rupees 100. This reversal is pertaining to 1718, but it will be reflected in table 7 because I have reflected in table GSTR 3B of the 1890. So net ITC as per 7J would be 1400 rupees, right? Now there will be no issue in comparison in table 8 because it will compare 1500 with the 1500, so there will be no difference. But here the issue will arise in the case of GSTR 9C, table 12, right? Let's see. In the table 12A, ITC is for books 1500, right? Table 12B and C's are for the ITC's adjustments of previous year done in current year or ITC adjustment of current year done in next year. But 12B and C talks only about the ITC. They don't talk about the ITC reversal, right? So there is no scope for reporting of the ITC reversal in 12B and 12C. So result would be ITCS for books of account 1500, but ITCS for annual return would be 1400. See here there will be 100 rupees unreconciled ITC, right? But same I need to make proper disclosure in notes that why this is a difference of 100 rupees, right? And there is no scope for reporting reversal of ITC in 12B or 12C. So there is a difference of 100 rupees in table 12 of the GSTR 9C, right? So we have discussed the output tax liabilities and input tax credit various scenarios which may arise in FY 1819. And now last 2 points, TDS TCS and e-way bill. First we will see at the TDS TCS. As we all know that TDS and TCS provisions have been made effective in the mid of the FY 1819, right? So one can say there is no direct impact of the TDS and TCS on the GSTR 9 or GSTR 9C because it will be the forming part of your cash ledger and you can utilize the same towards the cash payment, right? So it is directly not affecting GSTR 9 or GSTR 9C. But what point we should consider in while exercising or doing GST audit, and how to make reconciliation of the figures of the TDS or TCS, right? So it is advisable that we just look at the amount and the transactions mentioned under the table of TDS and TCS and compare with the turnover of the registered person, right? So by mistake we have not accepted the TDS or TCS pertaining to some other person, right? So ideally the transactions under the tab of TDS and TCS should match with the turnover in our books of accounts. Broadly, we should make reconciliation and comparison of the TDS TCS with our books of accounts, right? And now the last topic, e-way bill. As we all know that e-way bill for most of the movement was made mandatory in the 1819. In 1718, we may not have the much issues about the e-way bill, but in 1819, most of the movement are covered under the e-way bill provisions, right? Further, there were some state-wise different relaxations in different states, right? In Gujarat, we have certain relaxation for certain items that e-way bill are not required for those items. E-way bill are not required for the intra-city movement. So there are different provisions in the different states for regarding the e-way bill, right? Further, it may happen that e-way bill prepared, but not only for the supply, right? But e-way bills are prepared for all kinds of the movement of the goods, right? So even though there is no supply or no there is no sale transactions, e-way bill would have been prepaid. So when you compare the e-way bill data, there will be many transactions which are not supply, right? So we need to keep in mind that also. And here we will discuss what is the importance of the e-way bill data for the GST audit, right? What to the what extent we should compare the e-way bill data, to what extent we should rely on the e-way bill data, to what extent if there is a difference we should report, and what steps or what consequences would follow if the e-way bill provisions are not followed, right? So we will see what are the impact of the e-way bill under the GST audit. We will see with reference to outward supply and then with reference to inward supplies, right? So it is important to have the abstract of the e-way bill data, right? Now we can have the abstract of the e-way bill data from the e-way bill portal. But here the main problem is that e-way bill portal gives the data of 5 days at a time, right? So we cannot get yearly data at a single click. Then we can access only 5 days data at a time. So for if we want to get the e-way bill data for entire year, we have to rerun cycles so many times. So it will be difficult, right? Now option to that would be the extract the e-way bill data from the GSTR1, right? In GSTR1 also in B2B supplies tab, we have import e-way bill data option, right? So from that tab, I can import the e-way bill data. Though this e-way bill data will be only with reference to supply transactions and not other than supply transactions, right? So if there is an e-way bill for the repair movement or job work movement, it may not be reflected in B2B supply. But my all sales transactions, supply transactions, e-way bill data will be easily available from the GSTR1, right? So this abstracting e-way bill data from GSTR1 would be good option compared to the abstracting e-way bill data from the e-way bill portal. However, at current, some of the software, GST softwares provide facility to abstract the entire year data at a one click from the e-way bill portal, but normally it is not possible. Now, after abstracting this e-way bill data, we should make reconciliation of the e-way bill data with the GSTR and books of accounts, right? So whether we need to find out whether for all the transactions for which e-way bill required to be issued, whether it has been properly issued or not, whether any transactions without issuing e-way bill, right? And as we all know, there will be many differences between the e-way bill data and the GST data. Some of the possible reasons for such difference would be basic threshold of rupees 50,000. So if my supply transaction is only for 20,000, there will be no e-way bill, right? Then job work activity or no supply movement. I have to send goods for the job work. I have sent goods for the repair, etc. Will not be for this transaction. E-way bill would have been generated, but the same has not been reflected as a supply in the GSTR 1 or 3B. Then supply of services are not covered in the e-way bill. Then bill to ship to transactions. In such transaction, there will be two sales invoices, but their e-way bill will be only one. So it may not match with the sales invoices. Then in many cases, multiple e-way bill for the single invoices. I would have prepared the multiple e-way bill for single invoices. In all such cases, the data of the GST returns and the e-way bill data would not match. But we should keep aside these differences. We should focus on the supply data only, whether all supply or sales transactions whether the UA bill provisions are duly complied with or not. Right? If there are violations of the UA bill provisions, we need to see what are the consequences and how we can report the same. Right? So this is about the outward supply with reference to UA bill data, and now inward supplies, right? So reconciliation of inward supplies with the inward UA bill data. We can get inward UA bill data from the UA bill portal, but again the issue is inward UA bill data from the portal is available only for the 5 days, right? So here it will be issue to download the UA bill data from the UA bill portal. Now I have downloaded the UA bill data and I found out that the some of the goods are received without UA bill. Then what would be the consequences, right? I am the recipient of the goods. The UA bill issuance is the responsibility of my supplier and not my responsibility, right? So in that case, if I have received the goods and I can demonstrate through some delivery channels or consignment note that I have received the goods and I have invoices, that will be sufficient, and it cannot be said it is default on my part. Now reverse case, what if there is an inward UA bill data but there is no inward supply, right? There is a UA bill data for my inward supply, but the same has not been there in the books of accounts or GST returns. Then what will be done? Then we need to find out the reasons why such mismatch. There is a mistake by the supplier in uploading the UA bill data or some any other reasons. And based on such reasons, we need to find out the resolutions for the same, right? So this is all about the UA bill data that we should consider while doing the GSTR 9 and GSTR 9C and specifically GST audit. So that's all from my side on this topic. I thank you all of you for your patience hearing. For any query, you can contact me at any time. I have given my email ID on the screen. You can contact me for any query. Thank you. And at the last, let's all pray for the well-being of humankind, and let's pray that we come out of this COVID-19 situation as early as possible. Stay home, stay safe. Thank you. Thank you so much.